Okay, so this is the manufacturing account from 2018. I put my hands up. I made a mess of the first working with my calculation, so I've just restarted this video. So you see I've already got the first few things written out. So anyway, the stock, the working one, it tells you the stock levels. You don't have to do anything with that just yet. And then working two, it says it was discovered that finished goods have been sent to a customer on a sale or return basis. And if you remember, when something is sold on a sale or return basis, it has not happened. Okay, so uh, the sale hasn't happened. So we have to take the sale away. So if you remember, we always sell goods to customers at the sales price, but stock is always at the cost price, or the lower of cost and value. That's the previous concept. So sales and debtors need to go down by the sales price. So sales is 1.4 million. Okay, and we need to take away from that the sales price of 17,500, and debtors is 62,000, and we need to take away from debtors the 17,500 as well, as if the sale hasn't taken place. If the sale hasn't taken place, the stock is resting in someone else's warehouse. So the stock of finished goods of 68.1, we need to add back onto that the cost price of that stock, which is 17,500 divided by 125 multiplied by 100, because there was a markup of 25%. So 17,500 divided by 125 multiplied by 100 is 14,000. So as I said, I did this question about 2 minutes ago. So we're adding the 14,000 back on, and that's that one done. Okay, the suspense figure arises. This is a normal suspense working as a result of discount allowed entered only in the debtors account. So discount should go in debtors and discount. All right, again, I'm just going to show you this with T accounts just to show you what it would look like, because that's how you've learned them with suspense accounts as late. So if I say, well, what happens with a discount? Discount reduces debtors, and discount then obviously goes merge. So it would be discount here. So what happens? So discount reduces debtors, so it's credit debtors. It's a discount of 600, and it should go in here. Okay, and they've left that out. So we have to do what they should have done, which is put the 600 on the debit of discount. Okay, so uh, discount, we're going to debit 600 from it, or to it, whichever it is. So discount is, and we don't have to do anything with it, is in debtors. That's what I'm trying to say to you. So that we don't have to worry about that. And this in effect is our step 3 there. So we have to put a debit of 600 to discount. So we go and find discount in the question. Discount net of 8,000. So see here, discount is a credit of 8,000. So if we're debiting a credit, we're taking it away. So we're going to take 600 from discount, which means this side is now 2,673,200. This side is 2,673,800. So we have to make them equal. So whatever incorporates suspense, 91.4 is on this side in the general factory overheads. That is 91.4. So we have to take 600 away from that, because we've taken 600 away from this side. So now both sides are 2,673,200. Okay, so that's the first part of that. The second part is credit purchases of raw materials entered on the incorrect side of the creditor's account. So if we've bought raw materials, again, I'll just change, actually won't, I'll do this again. So what is the double entry when you buy goods? All right, so it's debit purchases of 6,000, and that's and it's creditors of 6,000. So that's what it should be. That's what the T accounts should look like, right? But what they're telling us is that they've put this 6,000 on this side. So as their step 1, that's what they've done. So they've put the mistake, they've put the number on the wrong side. So what do? We undo it. Step 2, and that gets us back to 0. And step 3, do what shipping should have been done, which is a further 6,000. So in effect, we have to put 12,000 on the credit of the, we have to put 12,000 on the credit of the creditors account. So it's going to be creditors, and they are 49.4, credit a credit, so added on 12,000. So now our general factory overhead is 12,000 too little. So we've got 12,000 on the right hand side here, which brings us up to 2685. So we have to get this side up to 2685. So we're going to add 12,000 onto that. Okay, so that's our general factory overhead, and our suspense work being done. Okay, we actually saw that in the mock as we went. Okay, so again, that's one that's becoming more common. Number 4 then is your bank working. So your bank working, your bank rec statement. So the figure for bank and trial balance has been taken from the firm's records. However, a bank statement dated 31st of 12 shows an overdraft of 33.3. So the bank statement shows an overdraft of 33.3. Our accounts show an overdraft of 43.6. Okay, and we have to make them equal. So we have to find out, we have to adjust the mistakes that have been made. So first thing, so I'm just going to the bank. So this here is what the bank statement says. I normally have these the other way around. This one doing this, and this is what our accounts say. And we have to make them equal. So a check for 1,000 have been lodged directly to the firm's bank account. So it's in the firm's bank account, which is here, but it's not in our account, which is here. So we have to put this 1,000 in there. Okay, so a check for 1,000 have been lodged directly into the firm's bank account on behalf of a debtor in respect of a debt previously written off. This represents 40% of the original debt, and the debtor is undertaken to pay the remainder in January 2018. So this is our bad debt recovered working. So the full amount is a bad debt recovered. So you remember that from our, hopefully from our work on sole traders and our stuff on sole traders in the last while. I'm just going to get them out of the way. So the full amount of the debt, which is 1,000 divided by 40, multiplied by 100, is 2,500. That's the full amount of the debt. The remainder of the debt, the 1,500, needs to get added on to debtors. So the difference between what we're supposed to get, 2.5, and what we did get, gets added on to debtors. Now, most of those bank rec workings before then had dealt with bad debts being written off, and it's the opposite way then. So the full amount gets taken from debtors, and the difference is the bad debt written off. But when it's a bad debt recovered, the full amount is bad debt recovered, and the difference gets added to debtors. Okay, so that's the first part. The second part, rent due was paid directly to the firm's rent due 31st of the 12th was paid directly to the firm's bank account. So again, it's in the bank statement, but it's not in our accounts. So rent due, rent to the 30th of the 9th, so that's 9 months, is 9,000. So it's 1,000 a month. So the rent due of 3,000 gets added to our accounts. So we've received the 3,000 that were due. Now that means that rent is 9,000 plus 3,000. It's 12,000. There is no rent due. Okay, so there's not going to be any rent receivable due in the current assets. Rent just goes up to 12,000. Okay, so that's the second part done. And the third part, a check for 3,600 had not been presented for payment. So we've put it in our account. So we've put it in bank and creditors, but the bank haven't put it there. So we've written a check for 6.3. So the amount in the bank statement should have been 6.3 less. So that's minus 33.3 minus 6.3. These should balance after this. It's 39.6 minus 43.6 plus 1,000 minus 3,000. Sorry, I put it the wrong way around. Plus 3,000 is 39.6. So they both equal there. Okay, so that's our bank record. The new one there, again, you would have not seen that before in any questions. You just have to think about, well, what's happened? You've been paid what you're owed, so you're just adding it onto your rent. It's not due, so you don't create a rent due. Okay, so that was that one. Uh, provide for a wage increase of 5% to be backdated to cover 3 months from the 1st of the 10th. So this is our wages. So wages at the moment, the total amount for direct factory wages are 200,000. Okay, that's for a year. We have to then add on 5% of 200,000 for 3 months because we're getting a wage increase. So, so that should be 5% of 200,000 by 3/12 is 2,500. So we're going to add the 2,500 onto our wages. Okay, that then is wages due. It's very important. You haven't paid it. It says provide for it. So the wages due, which is a current liability, has to be provided for. Again, you've seen that before in other questions. The backdating is just finding the 3 months. So that might appear a little bit more difficult than it actually was. The extension to the warehouse. So during the year, January to December, Austin built an extension to the Austin built an extension to the warehouse. The work was carried out by the company's own employees. The cost of labour, 24,000 before the wage increase, was included in factory wages. Now it shouldn't be included in factory wages. The materials costing 31,500 were taken from stock, so it's not purchases of stock, so we have to be aware of that. No entries be made in the books in respect of this. So, what's happened? This, whereas 24,000 before the wage increase was included in factory wages, it's not allowed to be included in factory wages, so we have to take it out of factory wages. I'm going to have to make this a little bit bigger. Actually, I might just bring this down. I might bring it down a little bit, sorry. So we have to take out, and it's the 24,000 out of wages. But it's not only the 24,000, it's the 24,000 plus 5% of the 24,000 by 3/12. Okay, so that'll be 300 euros. So in effect, we have to take out 24,300 further out of wages. So I'm just going to put that there. So it's 200,000 plus 25 minus 24,300. It gets taken out of wages and it gets moved into buildings because it was used to build a building. It's not used to run your business. So your buildings, your factory buildings are 940, and you have to add on the 24,300 onto that. Now, that would have thrown loads of people again, but it's just reading the thing carefully. It was giving you a clue around the wage increase there. The materials costing 31,500 were taken from stocks. It doesn't matter that they're stocks, that's purchases. So it's purchases of raw materials. You have 514,200, and you can't include raw materials that you're not using to make actually anything in your factory. You're using it to build a factory, so it can't be included in purchase of raw materials. So you take out 31,500, and that gets added into buildings as well. Okay, so that's that working done. So you've moved them from raw materials and wages into buildings. Again, you would have seen that that's in loads of questions, but generally not that often in manufacturing accounts. So that's a company account working. Again, just be wary that these workings from company accounts that they're moving in, they're trying to take in workings from questions that you don't expect to come up this year, and loads of lads then ignore them and then don't really know how to do those questions when they come up. So it's just another warning to you not to be leaving out company accounts, certainly the notes and the workings on your company accounts in your study. If you want to get H1, you need to know how to do those workings. Working 7 then, the included in the figure for sale of scrap material is 3,000 received from the sale of an old machinery. This machine had cost 20,000 on the 1st and 4th, and that ties in with working 8. Provide for depreciation at the annual rate of 10% of cost from the date of purchase to the date of sale. So you go plant and machinery. So plant and machinery started off at 420. Now you're taking out the plant and machinery you sold. The machine had cost 20,000. So plant and machinery goes down to 400,000. Okay, that's the first part. The second part is the depreciation of it. So it tells us the rate of depreciation is 10%. So it's 10% of 420,000 multiplied by 6/12. So that machine was sold on the after 6/12. So it'll be 2,100. And then it's going to be 10% of the remainder. So of the 400,000 for the remaining 6 months of the year, which is 2,000. So the total is 20,000 and 20,000. So the total is 41,000. You then do your accumulated depreciation. So that started off in the question as 420 minus 255. So what's that? 45, 65, 165. So that starts off at 165. You have to add on your 41,000 and then take away the depreciation on the one you sold. So that's 10% of 20,000 by the number of months you had it for. So these are normally a heap of months. So if it cost 20,000 the 1st to the 4th 2011, so you had it for 9 months and 11. You had it for 12, all of 2012, 13, 14, 15, and 16. So that's 60 months. Plus your 9 is 69. Plus another 6 is 75 months. So that's 12,500 you have to take away. So 165 plus 41 minus 12,500. Okay, you follow the same process as your sole trader or your company. You find your profit or loss in the sale. nearly always be a loss, but anyway. So its value is 7,500. So 20,000 minus 12,500 is 7,500. And you compare that to what you received. You got scrap for it. You got received 3,000 scrap. So you made a loss of 4,500. Okay. So that's your loss on the sale machine. That's going to go into your manufacturing account. Your sale of scrap material, the 3,000 is included in that. It shouldn't be. So the sale of scrap is 5,100. We're going to take out the 3,000 out of it. So it'll be 2,100. Okay, that's our basically our depreciation working out the same as our depreciation on motor vehicles. Buildings are depreciated 2% of cost 31st of 12. So buildings have changed. So it's going to be this number here. So 940 plus 224.3 plus 31.5. So it's 995,800. So your depreciation of buildings is going to be 2% of 995,800, which is 199,916, which is a ridiculous number. So anyway, that's your expense. Probably revaluing them. They're not. Grand. So you're splitting that number up. It tells you depreciation is to be allocated 75% to the factory and the remainder to office. So of that, so the factory expense of that is 75%. Of 199,116, which is 14,937, and the remainder is going to, what did it say? It's going to admin or somewhere. Office admin. Be 25% of 199,116. Okay, so in effect, you're not doing anything with this now, other than it goes into accumulated depreciation. So your accumulated depreciation of buildings starts off at 940 minus 900, so 40,000 plus 19916. So that'll be, what's that, 59,916. Okay, I don't know why they're making those numbers the way they are. Hopefully it's right. Provision should be made for investment income and debenture interest due. Okay, so this last couple of workings, nothing too hard here. So we work out our investment income, 4% investments acquired on the 1st to the 3rd, so you don't have them for the first 2 months. So 4% of 330,000, and it's by 10/12. And that's 11,000. And then your investment income due is 11,000 minus whatever you received. So look to see if there's any investments here. Doesn't appear to me, so you haven't received any, so it's all due. And then you've got to do your More debenture interest. So your debenture interest includes an increase of 50,000 on the first and fourth. So for the first 3 months of the year, you had 8% debentures, 8% of 250, which is 5,000. For the remaining months of the year, it's 8% of 300,000, which is 24,000. So in total, it's 29,000. See if we've paid any. Don't see any. So the debenture interest paid should be 29,000. So let's make sure I have that right. So I never multiply that by 9/12. So that is 23,000. Okay, there doesn't appear to be any paid, so the debenture interest due is also 23,000. If I come across it later when I'm putting them in, obviously we'll adjust that. Last thing is the creation of a provision for bad debts equals to 6% of debtors. So bad debt provision. 6% of debtors, so 6% of our new debtors figure. So debtors has changed, I think. Yeah. So debtors 46,000. So it's 6% of 46,000. It's 2760. And that automatically is an increase of 2760. Don't forget to put that in. So when you create a bad debt provision, the full amount is an increase. All right, so that's all the working. So there was a whole load of them. This would not be a nice question for the. It wasn't a nice question, being honest. So 68,100 minus 14,000, and it goes along with again the whole idea that you need to practice all of these the whole time because you don't know what's going to come up. You can't just assume it's going to be a sole trader. I know you're all hoping to be a sole trader, but you can't assume it'll be that. You have to know how to do company accounts. You will know how to do company accounts anyway because they're the same as sole traders, except with the dividends. Um, you need to practice all the workings of company accounts anyway. So really, there shouldn't be any problem. But you do need to practice these and make sure you can get them in as close to definitely underneath an hour. Okay, you need to be able to do one in. You need to be able to do question 1 and question 8 or 9 in an hour and a half. If you do it that way, you have 45 minutes for your 2 out of 3 questions. So just be aware you're going to be putting yourself under a lot of time pressure. Anyway, that's 138,500. Discount it'll be 74. General factory overheads will be 102,800. Creditors will be set 61,400. And I think I've all the rest of them added in. Bar this wages. So this might be hard to read because it's 200,000 plus 2,500 minus 24,300. That 300 is the 24,000 plus 300. Just if you're looking to see what that is. So that is 200,000 plus 2,500 minus 24.3, which is 178,200. That's our factory wages. Okay, just we should call it factory wages for the sake of the answer. Okay, so that's that one done. Think of all the rest in. I do. Okay, so that's them all. It's a matter of just throwing all the work in. Now, again, I wouldn't start generally. I would just tend to put all the numbers in as I come across them. Um, I think for the sake of this answer, I'm going to start with the manufacturing account and work my way down, just to make it easy to follow, right? So we just take care when we're doing it that we've got everything in. So you need to know this skeleton. So it's quite straightforward enough to skeleton. It's opening stock plus purchases minus closing stock plus your two prime costs, which are manufacturing wages, hire special equipment, and if there is, and I know, I'm pretty sure there is in this one actually, if there is a royalties that we have to pay, they go in there as well. So I'm not sure if you would lost marks if you put royalties in as a factory overhead, but and the thing will still balance regardless where you put it. But if there are royalties, they go in here. Your factory overheads, your likes of your depreciations on your plant and machinery, and we know there's depreciation of buildings because it gets split up. If there's a loss on the sale of machinery, which there always is, pretty much, and then your general factory overhead. So any expenses that we can attribute to the factory have to go in, and then it's just add work in progress, take away work in progress, and then you take away your sale of scrap material. If there is a profit on the sale of material, that gets taken away as well. So we'll just go through them. I'm hoping I will get this right first time. So your opening stocks of raw materials are 41.5. Your purchases of raw materials, now that's from our answer here, which of course I didn't do. So 514,200 minus 31,500 is 482,700. This is probably a good way for you to do it, and just be ticking them off as you go, because you can have the workings page in front of you. Just make sure you do tick everything off once you've got a number in. Your closing stocks of raw materials, that's one of the first ones we had. So 54, sorry, closing stocks of raw materials is down here, 31.5. That generally doesn't change. So that gives you your cost of raw materials consumed. And you have to add on to that your prime cost, which are your manufacturing wages, or your factory wages. So that was our big working 178,200. You have your hire of special equipment. If there is hire of special equipment, it could be in here somewhere. 39.8. And then this is what I'm talking about, this royalty payments. Now, you know, it's a royalty payment is payment to somebody else for allowing you to produce their products. So royalty payment could be another operating income, but it would have to be in the credit side. But because royalty payment is in the debit, it means it's payment for producing goods. So it's a 26.9. It's your prime cost. So you add those three on, and you get your prime cost of 73,600. Right. So with this, yeah, I do that. I have the answers, the main answers written down beside me, so I was just seeing my day didn't work. Anyway, that's right. So you move on to your factory overheads, right? So your factory overheads are your factory expenses. So anything that says factory. So we're going to have depreciation of the factory. Now, only the amount that we worked out it to be, so it's the 75%. So the 14,937. We're going to have the depreciation of the plant and machinery. And that is 41,000. We're going to have we've got direct factory weight. We're going to have the loss on the sale of plant. It's from the same working. 4,500. And then is there any more? General factory overheads. Always leave space for a few more, which I haven't done. So general factory overheads from our marking scheme, that had changed, had it? It had incorporated suspense, so it has to have changed. Where is that? 102,800. So add those together. Now, you don't take them away. All of the above ones, all these ones up here are expenses. So it's trying to find the total expense. So you add it on to your prime cost. This is finding the cost. So the only thing we really take away are profits. It's a little bit different. Anyway, add your work in progress. Started your opening stock work in progress, 38.2, and then take away your work in progress at the end of the year, which hadn't changed either, of 40,200. One of the few things you do take away. So you always take away closing stocks. So even up here, we added opening stock and took away closing stock. Same it down here. So take away the sale of scrap materials. Sale of scrap materials down there at the bottom somewhere. 2,100. If there was a profit on the sale of machinery, you would take that away as well. There isn't. So your cost of manufacture is then 8,96727. I've got an answer of 737. So let me just see where I've gone. 3 sevens. That should be one. You see that one. It's the type of thing you could transfer incorrectly. Where is that depreciation? 14937. 14937. Okay, there we go. Okay, so that's all correctly done there. Again, taking care to transcribe stuff properly is a good idea. So the second part then is your trading profit loss account. This should be a little bit shorter because that's all one big working. So you've got our sales. Now sales had changed. 1382500. So let me just make this a little bit smaller so you can see it. The opening stock, so it's opening stock finished goods. So this deals only with finished goods. So 43,100. And your cost of manufacturing, that's your final answer. So 896, 737. Okay, take away your closing stock of finished goods. Now that have changed as well. Down to okay, just I can see that number is wrong. Sorry, oh god. See, this number is wrong. So 68.1. I took away the 14,000 instead of adding it on. Sure, you all spotted that. So it's 82.2. So usual thing, opening stock plus purchases minus closing stock, and then take your answer away. And that gives you 524763. 863 there, so 896737. Yeah. Okay. All right. So on to our expenses. So we're looking for basically any other expenses that are left over. Remembering you've got to also include the remainder of your depreciation of buildings. So that's the first one I'm going to put in. So just as I don't forget it, the depreciation of buildings is 4979. Okay. Then we're looking for any other sort of administration expenses. So there's normally admin itself. Don't think that there'd be no working. So 59.2. Okay, so your selling and distribution expenses then. Well, you've got your selling expenses. They're 45,000. Just have a look, see if there's any more in the debit. On those, discount is another operating income. Royalty payments we've done. Rent is other operating income. So that's just the two of them, unless there's any of the workings. There is the bad debt provision, the increase in bad debt provision of 2760, selling expense. Okay, so that I think is them all. Okay, so we'll add those two together. And you get 412824. Now, there are a few things to add on. I'm going to have to make space for this again. This would have been new enough, but so what have we got to add on? We've our other operating incomes. So we've got this discount net. That changed in the suspense working to 7 something. So the discount net changed to 7.4. That gets added on. Of course, we label them other operating income. I've already mentioned that there is a rent. Now rent changed, we know, from 9,000 up to 12,000. And then we had our bad debt recovered. That was in the bank working. That was 2,500. Again, all sort of new in a manufacturing account, but not new in reality. So 434724. We have investment income. So my skeleton isn't holding up too well here at all. So we're going to add on our investment income, just down at the bottom, 11,000. And then we're going to take away our debenture interest, which was 20 something, 23,000. Okay, and that'll give us our profit before taxation of 422724. There's normally taxation in these questions, so have a look. It'll be on the credit side. There's no taxation, so obviously just delete those two. Less dividends. There will be dividends somewhere. Dividends paid is 27.5. There's no reason there couldn't be dividends due. So that'll give you a retained profit of 395,224, and the profit loss balance is somewhere credit of 38,000. So credits get added on. If it was a debit, you would take it away, and that gives you a profit and loss balance of 433,224. Now just bear with me, I'll just make sure I have that right. Yeah, I have that right. So I would then move on to my balance sheet. Okay, so balance sheet, patents. There was no patents written off, so if there is patents, it'll just go straight in. No, which is strange because there should really be patents in the manufacturing business, but there's not. So factory buildings, a lot of the time you revalue them. Now I know we didn't revalue them. They were 900 and something. Buildings, they were 995,800. The accumulated depreciation is 59,916. Then they're added together, or they're taken away from each other to get 935,884. Add your plant and machinery, and it was working on that. Plant and machinery went to 400,000. The accumulated depreciation on the plant and machinery is 193,500. Which gives you 206,500. So we'll add those two together. Now I'm just assuming there's no other fixed assets. Machinery if there's not. So our current assets are three stocks at the bottom. So raw materials 68.1, work in progress 31.5, and then our finished goods is 82.1. We're looking for any other current assets. So we've got debtors. Now we know debtors has changed, and it's also less BDP. So debtors is 46,000, and the bad debt provision is right down at the bottom, 2,760. Okay, so that's 43,240. Just having a look. Anything else on the debit side there that hasn't gone in? No. So the last one is, I think there's investments, isn't there? So investment income due is 11,000. Okay, your creditors have then followed you within 1 year. Your trade creditors themselves, 60 something at the top, 61,400. You definitely had debenture interest due, 23,000. Yeah, 23,000. You have your bank, which is your bank reconciliation working. 39.6. You then have your wages due. Remember your backdated wages. So that's 2,500. It's either 2,500, 2,000. Yeah, it is 2,500. Then if there's any more, well, straight away we've got PAYE there of 20,700. Just make sure there's no more. That's in. Yeah, that's them all. So add them together and then take away. Just gonna make a bit of room for myself here. So that's 88,740. Just the number I have here. I took the wrong numbers, sorry. That should be 31.5. The work in progress is 40,200. Again, just taking care. So add that on. Is 1203224. Your shares then. So your issued shares 550 ordinary and 250 preference. Would say is make sure to put in your authorized. So 600 and 300. Revaluation reserve, there's none in this question. So they add up to 800,000. The profit and loss is 433,224. I managed to leave out the loan, which is 300,000, I think. Or is it? There's an increase where, yeah, 300,000. So we'll add those, the 433 and the 800, add on to the loan, and it'll be a miracle if it balances. Doesn't. What have I done? I left out investments. Again, sorry about this. It was definitely investments. Where are they? 330. So hopefully it balances now. That's 1472384. It doesn't. Oh. 1533224. There's a 4 there. There we go. It's balanced. Okay, I'm going to be perfectly honest with you. If that question came up in manufacturing, I would be doing question 2, question 3, and question 4. I'll be doing question 3 and question 4. Well, for me, it'd be question 2 and 3. So I wouldn't actually do the manufacturing accounts because as you can see, I made quite a few mistakes. But that's given that you have practiced them, I wouldn't be put off. I might go around showing you over the next little while how to do the depreciation question, revaluation question, and that will give you a few more options for the question 1 just in case. if you wanted to leave out manufacturing accounts and take a chance. Anyway, we'll talk to you. We'll get back.